Hello traders, Cousin Vinny coming to you from theclosingprint.com, October 10th, 2021. In this edition of your weekend video newsletter, we'll look to the indices to see what we might have in store for us this week. With big cap tech stocks mostly bullish last week, we did see the bond stock ratio bullish. Junk and high yield corporate are telling us to be a little bit cautious. Yet we do have the S&P 1500, the Dow Composite, and the XII mostly bullish near the 50-day moving average, so we need to see that follow through, along with a tick up in breadth, which did start a cycle higher last week. We're looking for a follow through there. S&P equal weight is on a bullish buy signal. US dollar, Japanese yen is telling us to look forward to economic growth into year end. While bonds did pull back, we saw the 10-year pushing up to 1.60% last week. That's bullish to neutral. Many are looking for 1.7%, which was what we saw back in February, March, where we had our last pullback under similar circumstances, so we have to keep an eye on yields. At the same time, we did see the safety trade in gold and silver remain quite bearish. Copper's in a sideways range. Brent and West Texas crude are bullish for equities as they rise, while we look for strength in aerospace, energy, oil and gas, exploration, financials, the travel and leisure group, rails, and staffing. In addition, we saw small cap sectors in energy, industrials, and financials strong last week. International markets are still in a flux or a bit of rotation with bullish follow-through in Russia and China. We'll look at some of these IBD 50 names along with some staffing names that are of interest that you might note here in green. Stocks that are showing relative strength, stocks that are on the move, and some blue dot scan candidates in cyan. Stocks from stochastic scans and volume scans are also on our radar. Bukowski has 4 or 5 green with a CPI signal half green since October the 8th at 55.6%. That's telling us to be cautious. With 12 bearish patterns, 15 bullish patterns, and 379 patterns waiting for breakout. This week we have 13 bullish indicators, 4 neutral, and 3 bearish. Key support, S&P 500, 4,300, resistance at 4,400 and 4,450 with 0 gamma at 4,412 and the vol trigger at 4,830. We did see a reduction in negative gamma last week, so mainly this week we're looking for the indices to push back above the 50-day moving average along with stocks that were showing relative strength last week. The S&P equal weight index gave us a buy signal last week as the number of stocks trading above their 50-day starts to improve off of an oversold condition. 70% of stocks were below their 50-day moving average. That increased to 60% below or 40% above as of Friday's close. We need to see this continue to move higher, which would indicate institutions are buyers. While the stocks that we follow in the growth sector did move higher last week, the majority saw a little weakness as it proceeded to move above the 21-day. We did see outperformance by financials, energy, industrials, and materials as they moved above the 21-day moving average. So we'll look for follow-through in this group, along with the 75 stocks that institutions commonly hold in their core portfolios, which closed just below the 50-day moving average. We're looking at oscillators starting to turn, so this could start a bullish leg up into earnings season for the fourth quarter. At the same time, we do want to see a bounce in the growth stocks, NASDAQ 100, sitting right on top of the 10-period moving average on this chart. Momentum indicators are starting to turn higher. So a retest of the 50-day moving average seems to be in the cards in the short term. as we start fourth quarter earnings on Tuesday. In addition, as we look for breadth to improve, we'd like to see the small caps moving higher. For the most part, small cap energy, financials, and industrials were in play last week, but the IWM Russell 2000 is still stuck in the middle of this range, just above the 50-day as of Friday. We also need to see the bulls take control. Wilshire 5000, a broad market index, sitting right below its 50-day moving average in a descending pattern. Momentum oscillators are starting to turn higher, so that could be a bullish tailwind going into earnings season, with check and money flow moving higher. This week, we'd like to see that move back above the zero line and for larger participation in the broader market. Those indices, together with the NYSE, is showing a bullish histogram with more new highs on Thursday and Friday. Moving averages are starting to turn with the advanced decline in the lower panel. Overall, looking more bullish. We need these to continue this week as the bulls look for breadth to improve, along with VIX, which we'd like to see move a bit lower. Finishing the week on a green signal, that's telling us to look for higher highs and higher lows on the 60-minute time frame, while the front month VIX and the 3-month volatility index VXV ratio drops. That would be bullish for equities. As you remember, last week we talked about this level where we saw a print of 1.07, 1.08 during the week. That usually indicates a bounce or an area where we should see a reversal. In the 12 occasions prior, punctuations into the green zone led to follow-through thereafter. So if breadth improves, we should see the NYMO, New York Stock Exchange McClellan Oscillator black line here push higher, see an improvement, and for price action to get back above the 50-day moving average. If all of those things happen this week, we should have the confirmation for a follow-through into the fourth quarter earnings season. The bond stock ratio between the S&P 500 and the 10-year bond is more bullish to neutral. As we hang out at the lows here, we want to see this ratio continue lower like it was back in 2017, where the 65-period weekly moving average continued to drop. We're looking for the price action to mirror what we saw at the same time, which was a rise and a trend continuation after this drawdown of 6% on the major indices this past couple of weeks. That said, we also need to see junk bonds and high yield corporate debt stay above this area. So we need to see a bounce this week. Otherwise, that would be further indication that we need to be more cautious in the short term, as these indicators and assets represent a risk on, risk off environment. With IBB dropping off dramatically, the green line, we can tell that risk is off in the biotech sector. That USO is still pushing higher, so we have one bullish, we have one neutral, which I would consider IWM to be, as we covered previously, sitting on its 50-day moving average. Now we'd like to see junk bonds bounce along with IWM, while biotechs continue to show weakness. With those risk on, risk off indicators, we also need to keep an eye on the 10-year yield. It's not so much the bullish trend, it's more the velocity of the move. As we've seen in previous occasions back in 2012, 2013, and 2014, we did see higher prices as S&P 500 rallied 67% with the 10-year rising. It's just these high velocity moves that spooks the market. So that's a caution signal going into the week. Keep an eye on the 10-year yield. That could impact growth stocks again, but generally is bullish for the markets overall. Currencies also saw the US dollar in a bullish trend, which has affected the US dollar Japanese yen pair. This generally signals bullish economic conditions domestically, while putting pressure on commodities like gold and silver, as they both remain in a descending pattern with RSI below 50. For both gold and silver, you can see the latter in a markdown period characterized by price staying below the 921 and 50-day moving averages. Volume was above average on Friday, but it faded back below the 21-day. So what looks like a lack of interest in the safety trade in the short term, while Brent crude and West Texas crude continued to move higher. On the weekly time frame, this is considered bullish for equities as it has a positive correlation, especially against the backdrop of lack of supply in an environment of high demand. So if this continues, look for follow-through in your energy, oil, and gas names this week. The sector heat map also shows strength in aerospace, energy, oil and gas, financials, the travel and leisure group, rails, and staffing, with weakness in IBB, real estate, and retail. So with the rotation that we're watching, we are focused on those sectors that showed relative strength last week. In addition, we had Russia and China outperforming within the international ETFs. So with this in mind, we're watching energy, financials, travel and leisure, rails, and staffing this week, along with transports as those continue to move higher, with weakness in biotechs noted previously. Stocks that are set up this week are in the opening monologue. We had AutoNation, APP, ARES, AFRM showing relative strength. After a 3-week consolidation, it took off on Wednesday when it announced that it had partnered with Target in addition to previous announcements of Walmart and Amazon. So we'll look for continuation there, along with Builders First Source, which is above the 21-day, looking for a follow-through breakout of this large range, with most of the energy stocks in focus. Callon Petroleum with a doji on Friday, looking for a follow-through. The 20, 50-day are rising. We also saw Cloudflare, NET, take off to the upside. Champion XCHX looks good. It's following through on the breakout. Diamondback Energy, another energy name, following through. Evercore, Asset Managers, KKR, also looking bullish. Also watching Digital Turbine, APPS, for a follow-through this week. HubSpot, sitting on its 50-day, found buyers looking for a push higher. We did see a handful of healthcare stocks following through as well, like Tandem Diabetes, off of a bullish trend, a little base, a descending channel. Looking for a follow-through, RSI's above 50, MACD turning, stochastics rising. Additional asset managers like Carlyle Group moving above the 21-day with a dramatic increase in earnings for the year, 242% over 2020. Looking for a follow-through and another increase in 2022. The company has earnings at the end of October. RSI rating of 90. Looking for a base breakout in the next couple of days, along with Upstart and Upwork. Both of those looking very strong last week. Looking for the follow-through. A break above this pivot. RSI rising. MACD has crossed. Volume picked up. And stochastics rising. With some of the lumber manufacturers standing out, West Fraser is a Canadian company looking for the break higher. We see Western Alliance with a flag breakout and Zscaler with a potential bounce, looking for the follow-through this week. MACD's turning, stochastics rising, a little pullback to the 21-day. If we do get a follow-through on Monday, Tuesday, that could be an early signal on Zscaler. We also saw a lot of aerospace and defense names catching a bid last week. This is AJRD looking for this base breakout above this 44 zone to continue this week, with L3 Harris, LHX also breaking out. This is one of 3 companies bidding on a satellite network for the Department of Defense, along with Raytheon breaking out of this base that started in June, looking for the break to continue higher, together with Northrop Grumman. All 3 of those bidding on a network of satellites. Mary McDougall, I forget her last name, but she pointed that out as well. They bid on Friday, and they'll have the awards announced by December, but it looks like institutions and investors are actively buying these stocks. I wouldn't chase Northrop Grumman. Look for a little flag, but the strength is definitely there. You can tell the volume indicates institutions are active. MACD is above its signal line, and RSI is showing muscle. We also see these staffing companies, CCRN, for supplying temporary positions to the medical community around the country. Robert Half, staffing services breaking out on Thursday, Friday. HSII in the management, executive management, staffing industry groups as well. And True Blue, which is in the staffing of construction and industrial personnel. You can see that also broke out of a base as employers actively seek new personnel, areas where we'd be interested in buying in the short term. Additional stocks noted with asterisks are of particular interest this week, with many of them breaking higher, like Apollo Global Management, Ford, GM management having very bullish things to say going forward. Ford with their electric vehicle division showing increasing sales, and General Motors with very bullish comments from the CEO last week, with both companies seeing a follow-through off of the 921 day. I'd look for a little flag now. Volume suggesting institutions have been picking up shares. Look for continuation this week. Okay, traders, that's going to do it for me. This is Because of Any coming to you from theclosingprint.com. Be sure to check out the stocks that are listed in the opening monologue that we've suggested. Those with asterisks of particular interest, all of them are set up. Stochastics in most cases are rising, along with MACD above its signal line and volume increasing. Looking for those sectors highlighted to outperform this week. Financials, we have the big banks reporting on Tuesday, so just keep that in mind. And look for those watch lists to come out later tonight, about 12 o'clock midnight on the East Coast, 9 o'clock on the West Coast. So be sure to check your inbox for those later tonight. Have a great evening, and we'll talk to you soon. Take care.